investors didn't like something that they saw. What do you think was a disappointment in terms of production?
No, I don't think there's anything that's a disappointment if you look at it. You know, we came in slightly above consensus as far as our financial numbers go. Barrick's in good shape. You know, we're not about how much gold we produce, it's how much profitable gold we produce. We're certainly guiding back to the same guidance that we put in this year. We did have a softer production out of Nevada, but that's not a long-term trend at all.
So, Mark, to that point, if you're going up to the high end of production would be 4.6 million ounces this year, I'm just really interested as to what would prevent you from getting there. Labor, sticky costs, has all the good stuff already been mined? Like, what is the biggest inhibitor to that goal?
Yeah, so remember, mining is a long-term game, so it's not about just this year. It's about what do we look like in 10 years' time. And I think it's worth going back to when we announced the joint venture with Randgold. We set ourselves some targets. We've produced 19 million ounces. We've replaced all those ounces plus more through the drill bit. So we have grown reserves. We've really delivered on the synergies in Nevada. It's a very big foundational value proposition for us in Nevada. We've cleaned up our portfolio, again, focusing on tier one assets. And so, you know, midpoint is 4.2 million ounces. That was our target this year. This past year, we need to get back up there, and we definitely have the assets to be able to deliver against that.
Mark, I mean, really simplistic here, but what is the hardest thing about mining right now in this environment?
Well, when you wake up in the morning, you got a few challenges, and then you have a couple more in the afternoon. That's mining. I think the key one is really, you know, my focus is building real value. So growing this business on the back of tier one assets, whether it's copper or gold, high quality assets, long life assets. And, you know, one of the things we've done in the last 4 years is strengthen the financial component of Barrick, and we've been recognized with Moody's regrading us to A's, the best grading in the, and with a stable output, the best grading in the gold industry. We've also replaced all the gold we've mined. We've got very little debt, strongest balance sheet in the industry, and we've deployed our exploration teams, and we really are well equipped. And today we actually announced a significant intersection in our 4 Mile project in Nevada. It's a 100% Barrick asset, and really we think that's the first sign of a new discovery in that project. So we are investing in our future. That's what mining is about, because it's a consumptive industry. If you don't invest, you have to buy.
Yes. No. Yeah. We'll get to that buying in just a second. I just want to go back to the share price, Mark. I get it. I get that you're long term. I totally get that part. But the negative free cash flow issue. Investors are unhappy about something. How do you fix that, though, in the short term? Can you produce enough to offset the rising costs, for example?
So again, just coming back, you know, I know that your show is all about today, but mining is not. And so, you know, the share price will go up and down, not necessarily in that order, but over the long term, we deliver long-term value. And again, we've steadily rebuilt Barrick's profile in the market. We've got a solid register. And of course, we want to see this share price go up. We think we are undervalued relative to our peers. We've been, last year, bought quite a bit of shares. We bought our shares back because we felt they were undervalued. So, you know, we are focused on that, but it's a considered approach. There's no magic in winning over the market for the long term.
Well, let's talk more about buying stuff. Mark, I really like a quote you gave earlier this month saying that there's a difference between a value merger acquisition and getting bigger for just the sake of getting bigger. This was, of course, in response to not making a rival offer for Newcrest. So you didn't like that deal. Do you see any value merger acquisitions, as you put it, in the market right now?
Not right now. You know, we've certainly, as you know, participated in a lot of these transactions as far as the due diligence and evaluation of them. But you know, we built the new Barrick on the back of 3 big mergers, all at market, and we've been able to deliver against those strategic objectives. And again, you know, we've built our ability to invest in our own future. You can see that because we replaced all the reserves that we've mined again this year, and we have replaced all the reserves that we've mined since the merger. So we're in very good shape, both financially and productive-wise. We're guiding a 1 million ounce equivalent growth over the next 2 years organically, and we will continue to deliver a growing free cash flow profile, which will support our dividend over the long term. This current year is a year where we've got quite a bit of capital. We are going to invest in more mining fleet, and so that does impact on the cash flow.
Yeah, because you got to invest or else you buy, which to your point, if you're going to invest, then you're not going to do the buying. What about in copper, though? You're becoming a pretty significant copper producer. That is like the metal, one of the metals in the energy transition that we're undergoing here. How do you beef that up when reserve lives can be a little dicey for copper?
So for me, you know, again, when you look at our copper investments, Lumwana's, we're doing a pre-feasibility study this year, looking to increase its life of mine by 60 years. So that's a significant, and to increase its production profile. And Reko Diq is a world-class copper mine. It's currently estimated life of mine is 42 years. We expect it to go way beyond that. Okay. So those are those are the foundational building blocks of
All right.
of our
Mark, I'm just going to have to jump in here.